Welcome to the April 17th, 2023 Advanced Report from McGowanGroup clients and NetworthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, with your weekly fast-paced tour of the global financial markets. I'm also president, McGowanGroup Wealth Management, a team of 10 serving affluent families as portfolio managers and wealth advisors. All right. This is the Dow Jones Industrial Average year to date. And you can see the banking crisis took the Dow to 31,400. In our model portfolios, we were able to add 3 great names at that price. Obviously, that's working out pretty well right now. And I'm going to cover some fixed income for the bond people out there and the more conservative investors. I'm going to surprise you with a few things. Has to do with the banking crisis. What happened here? The Dow closes the week after having topped 34,000 for the first time since February, and that was before the crisis. Well, there's a resiliency there, and the earnings reports that I'll show you will validate that there's actually good news out there and there's low expectations. Low expectations appear to be the key to happiness during earnings season, but then I'm going to show you some things about forward profits that are shockingly positive. Inflation essentially disappeared again in March. 0.1% for consumer inflation and minus 0.5% deflation for producers. That brings the numbers down to about where the Fed funds rate is, signaling that there might be one more rate increase, but probably that's not going to be the thing to worry about. And I'll give you some other things that clients have been worried about as we go through this. All right, as an investor, you want to make great decisions. This is the high yield index. That's a basket of high yield B-rated corporate bonds. This is the low cost ETF. What does this tell us? Well, you could see the banking crisis took the price down, and you get yield every month from the basket of bonds. And last year pulled the high yield market to a substantial discount from estimated par value. What does that mean? Well, loans and bonds come due at par value. So that gives you an opportunity. How are we doing year to date? Well, year to date, the high yield index is up. With the bank failures, like in 2008, wow, we had a collapse in high yield prices. You could buy half-price bonds paying 15% interest in a basket that's well managed. That was a good opportunity, and it recovered faster than equity. And you got paid while you waited. That was pretty easy. I'll show you one of my favorites. I've used this since 1992 with clients. It is the longest, most successful high yield fixed income. Now, high yield is more volatile, and treasuries are investment grade A rated, and some corporates are. Well, in the high yield market, that's the B rated. Not distressed or C, but B rated bonds. This is a basket. Average B rating goes back to 1993 on this chart. What does it tell us? Total return 1,382% over this 30-year period. That's an average of 9.5%. And if you notice on this chart, well, this would be a good time to buy, and this is a great time to sell. That's a premium to estimated par, and that's a discount. Now, you get paid all the time, so you can reinvest if you get a crisis. This is the 2008 crisis. Notice it recovered in about 9 months. And here, that's a credit crisis. This is the crisis of 2020, all the while paying income. Here we go with what the news story of the week. This was last weekend. The report in the Wall Street Journal, they said ExxonMobil is holding preliminary talks with Irving-based Pioneer Natural Resources. And Scott Sheffield, the leader of Pioneer, he came back from retirement to save the company before the pandemic. And now, of course, they've come back up. See this right here? Pioneer's only $53 billion market cap, Well, ExxonMobil made $55 billion in profit last year, so if they decide to buy it, they could. But it puts attention on all of the Permian Basin shale producers, and of course they had a good week. You've heard about the demise of the dollar. This story recirculates. I've been doing this 36 years, and I've heard this story a lot. The dollar's going to plummet, right? Well, in actuality, every time that's been predicted, it's generally been wrong. But I'm going to show you some things about the best hedge against the dollar. Great dividend companies, and if we take oil prices, there's supposed to be a group of countries, the BRIC countries. Project Sandman is to flip a switch and don't use dollars anymore. Well, good luck with the banking logistics on that. Well, here, this says, okay, if I'm worried about the demise of the dollar, the yellow is oil, and dollars are here in the white. What do we notice here? When oil is high, right, you tend to have low dollars. Likewise, if the dollar is really weak, it says in a weak dollar, oil and oil companies could be the best hedge. And that's also true with dividend companies, like the medical dividends. Well, this says if I'm worried about the dollar, I probably should be what? I should probably have some energy holdings. Here is the news of the week. S&P 500. They make quarterly profit after tax, and then they report like they did this week. How are companies doing right now versus last year? There's only 28 companies that have reported so far, but they were 11% revenue growth and profit growth of 7.7%. That's actually pretty good news. Here you could see that's the pandemic. This is the quarterly profit of an S&P basket, all 500 companies. How much do they make per S&P unit? Well, that's $40 right here. You can see it plummets during the pandemic, and when it recovered to record, everybody looked back in 21 and said, man, I should have bought a bunch of great companies back there in March of 2020, which we did actually. And here, profits grow to a record in 22. We've had an earnings recession, second quarter, third quarter, and a preliminary report here. What happens after that? The forecasts, which are validated by what I just showed you, the forecasts are record S&P profits by the end of 2024, even if they're only half right. That says, what are you not getting? Well, that doesn't look like a recession in the forecast. And even Jamie Dimon said, yes, there'll be a recession, but it's delayed. Well, I guess that gives him a prediction that'll eventually be right. And the point is, you get worried about stuff and you end up making bad investment decisions from anxiety. McGowanGroup Wealth Management helps you with a team to rationally find great assets that produce real cash flow. Go to networthradio.com. You can contact us there. Thank you for joining us. Thank you for tuning in to Networth Media today and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowanGroup, Apple Podcasts, Networth Radio, and networthradio.com. The Networth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowanGroup Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Networth Media effort is also designed to address cycles in the market, value at risk of loss, at networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowanGroup Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.